back to another GrowthLab jump.
So August 24th.
And August is we've been talking about risk.
Yeah, we've been talking about risk.
And we always try to make this very practical for your business. A lot of this has been around planning, rightly so. And in August, we've taken a look at risks. What are the risks to your plans? What are the risks to your execution plans? We looked at people, we looked at working capital. And this week, I need to share my screen here real quick. We will be looking at your budget, which you all should have a budget since you've been so faithfully listening to our GrowthLab jump. You have a budget, you've adjusted that. And we're gonna look at a few things around identifying the risks in your budget and managing those risks. So let me share my screen here and we'll get started.
Hey, and this is a great opportunity. When you create a budget and you sort of forget about it, this, I think today is sort of the culmination of not just why you create a budget or a plan,
right,
but to actually operationalize it over the course of the year, reflect on it. And then more importantly, like we're going to touch on today, it's about identifying and managing those risks. Because plans are sort of made to not be broken, but
to be used as measuring tools, right?
Right, it's sort of like the North Star, right? You're kind of following it, but you may not be on the right direction, the right path all the time. So,
yeah, I mean, what we'll talk about is your plan is your plan, and you have an targets, right? You have an execution plan right behind that, right? You have numbers, a marketing line item. We have an execution plan behind that marketing line item, right? So if you find yourself off, to use a navigation front, if you off course, you still know where your North Star is, you still know where your targets are. What do you have to do to get back on course, right? So that's good. Love the analogies.
You like my North Star?
Like the North Star. We'll rename the whole series.
That'll be October.
All right. So just looking back, this is kind of what you've done. Leverage what you've done is, this is the same as last week. These next two slides are actually the same. Just to remind you, you've changed your mindset. We've all been in this 2020 together, and probably never have had such a challenge to business overall and personal lives that have been globally in sync. But we have now kind of survived, and now we need to change to that thrive mindset. So I'm assuming that we all have done that. We've identified whether we're going to adjust, pivot, or transition our business, and we've built a plan to accordingly, right?
Yep. And then that COVID adjusted plan for many of us was really about a pullback in revenue, a roadmap to furloughs and layoffs. And now that we are 5 months into this, we're starting to see a little bit of a break, if you will, an opportunity to bring back employees. Some customers are coming back, right? So now is a great time to also think about your budget to actuals, things that we're going to talk about today, because it doesn't have to be a big pivot in your plan. It just has to be, if my COVID adjusted plan looked like X, what are the risks and opportunities to not meeting that budget or superseding that budget? Let's not forget, just because there's an opportunity to exceed the budget, it doesn't mean that it's just going to happen overnight without any thoughtfulness, any strategy,
or investment,
right?
And so setting a monthly cadence, we'll hit on that again. But that cadence is super important for you to be able to identify the risks and opportunities and then manage them, right? Both on the upside and the downside.
And when we talk about these things, we sort of talk with a little bit of authority, right? As if it's a perfect cadence, it's a perfect input, perfect output, and that's not the case. As you go through this, it does feel like sausage making at times. There is a trial and error. It's about businesses finding what works for them. There is no exact formulaic approach to what we talk about. Sometimes customers, market participants think, oh, I'm going to get a bow tie at the end of the month. Yes, in some cases you are getting a bow tie on certain deliverables, but many times these deliverables are fluid. it's about the learnings, and it's about creating rigor and cadence again.
Yeah, and it's not just about producing the report, the actual budget report. It's about digesting that, right? And the business owner, the executives need to digest that with the team in order for it to have actually any impact, right?
Yeah.
You need to be part of the process, and that's where it really works.
Cool. So August is Risk Month, and today's
all about risk in your annual operating plan. Annual operating plan is another 3 words for budget. So ActualstoBudget reporting, we often refer to the budget as the annual operating plan or the AOP in a lot of our context. But we're going to look at how to use that ActualstoBudget report to drive risk management and develop countermeasures. So we're going to look at identifying risks and managing risks. Focus on risks. I think there's a lot more risks right now than opportunities for the majority of businesses. And then we're going to actually look at an ActualstoBudget report and walk through it, right? How do we interpret that? What's the dynamics going on? And then Dan and I are going to discuss countermeasures to this theoretical P&L.
Right. And another piece to that equation, it's not just about identifying the risk or the gap, but it's also understanding the magnitude, right? You could be off budget by 25%, but if that gap only equates to 1% of revenue, then it's really, the 80-20 rule. It doesn't make sense, like adjusting your plan or adjusting how people in your organization manage through that. You probably have bigger fish to fry. So something we should touch on.
Both percentage, your point is it's both percentage and dollar figure.
Yeah, because your example does show
both.
Yeah. Cool. So some processes and tools to identify risks. So let's kind of talk a little bit about the risks that are out there and how to help you identify those risks.
Yeah, and we, going back to what you've already done. You've already created a budget. You've adjusted that budget based on COVID, and you've adjusted. It's not just about the budget. Going back to navigation, it's about how are you going to get there, right? And how you're going to get there is your execution plan, right? That's whether it's people risk. We talked about that. What's your hiring plan or firing plan? What's your plan for
resources needed?
Resources, or if you're developing a technology project, what does that roadmap look like? Because that is built into your budget, but it's a standalone kind of working paper of that budget, right? What am I going to release in Q3? What am I going to release in Q4 on my platform? Those things are all obviously built in. They've got dollars and cents tied to them. So those 2 things, your budget and your supporting documentation, your execution plan, kind of go hand in hand in supporting you in identifying and managing your risk.
And what's interesting about this process, which we like to refer to it as sort of the annual strategic business cycle. Really, that's the purpose of the annual strategic business cycle, is to help companies identify risks and capture opportunities, and then be able to pivot and manage resources, regardless of what type of resources is needed to close those gaps or capture those opportunities. And it's of no surprise that one of the most important tools to help a customer or help a business identify risk is to first take what's in your gut, in your head, in your feelings, and put it on paper. The reality is, by the time we're done with this list and this exercise, chances are you're not really going to uncover something you didn't already know, something you didn't already feel. But it's important to have those baselines. It's important to have it in writing, in a spreadsheet, back of the envelope, right? You don't need to spend days on end building out a plan. You really don't have to go to the second and third derivative and all these drivers and overcomplicate it, overthink it. But it is important to have, what are my goals? In order to achieve these goals, I need so many people. I need so many dollars. I need this, I need that, right? And so being able to build that and extrapolate that out over 12 months, that is the first step. Let's create the budget, and then the coinciding in parallel. You've got the budget, you've got your goals, and now what is my execution roadmap? So let's talk a little. You touched on technology, right? Product development, but on a professional service business, right? Half of the economy is professional services now, right?
Yeah.
Or some sort of services base. Talk to me a little bit about an execution roadmap and how that is done in parallel with building out an annual operating plan.
Yeah, well, in most professional services organizations, you're probably, your biggest expenses are your people. You may also have a platform piece of that, but the majority of professional services businesses are probably people. So your biggest piece of your execution plan is, what are my targets? What are my targets for revenue? What are my targets for my cost of goods? And that's going to probably capture, 80% of your planning needs in terms of what do I want to drive in 12 months? And then you back into who do I need? I want to double my revenue.
Yep.
How do I double my revenue? I can either double my operations, I can expand my service lines, I could do X, Y, or Z, right? And then in order to do any of those, what do we need, right? If you're doubling your operations, you just need more of what you already have, whatever that might be. You need to find those people, you need to recruit them, you hire them, train them. So it's all of those things kind of boiled down into a roadmap. If I want to be there in 12 months, what do I need in 9 months, 6 months, 3 months?
It's very formulaic, right?
It's pretty formulaic, and
therefore your biggest risk is, of course,
it's your people.
People, right? It's in the acquisition, the attracting of people. It's in retaining of people. It's also in the professional development of people. So that inherently, like that type of plan, without seeing a growth strategy going from January to December, trying to double sales, and you're pumping more money into marketing, maintain your customer acquisition costs, and on the flip side, you have a hiring pattern, right?
Right.
You hope to God that you're retaining people. The people you are retaining are able to be developed and move into maybe leadership positions or expand their own skill set. And then to boot, you got to hire more people. So without that plan, you wouldn't understand that if I miss a hiring, on average, one a quarter, I miss that hiring, just back of the envelope, is probably going to affect revenue by threefold prorated to their salary, right? Professional services, you expect wages to be about a third of revenue, right? So right off the bat, if you miss that $100,000 hire in Q3, you can assume right off the bat you're going to lose out on $300,000 worth of revenue prorated to Q3. So
right.
That's simple.
And I'm going to go out on a limb and
Yeah,
just
sure.
go to human nature. If we don't write that down, like if you don't write down what your not only your budget is, but your execution plan, like hey, here's what I want to do. I want to hire one a quarter. If you don't actually write that down, I'm going to guess that the majority of people are going to hire that person in the Q2 and be like, oh great, I finally found somebody.
Yeah.
Right. And you're not going to think I'm so far behind. I'm not a quarter behind. They're just going to think, great, I finally found somebody. And you're not going to look, and you're not going to be able to measure yourself or communicate with your board, your advisors about measuring yourself.
Keep people accountable.
Keeps yourself or keeps others accountable.
As the hiring
to that
manager
plan.
and the HR, they were pinged to ensure that they were hiring X amount of people per month, per quarter. And unless you're doing one of the next things that we're going to talk about is ActualstoBudget, unless you're doing an ActualstoBudget based on not just financials, but also on your hiring roadmap, that would have just gotten brushed under the rug. So next thing is updating your budget and roadmap mid-year. That's something we've talked about. None of this should be a surprise. Why do we do that? Well, because things change. Things change. It's not just COVID. It's just things change. And mid-year is a great time to sort of pause, reflect, and then ultimately adjust in order to ensure that you hit your original goals. Because one thing is for sure, you've just put out bonus plans to your employees, and those bonus plans, those plans do not change. They do not change. It is the job of management and employees to adjust to hit those budget numbers.
Yeah, you still want to get to that North Star. Even though things have changed, even though COVID is it, we still all want to try and get to our North Star so that we can write those bonus checks.
Another tool that we talk about in planning and helping us identifying risk is the third one, which I actually enjoy this one because it is a little bit of blues. It allows you to think beyond the sort of the middle of the road paradigm.
It's good. It's good because it does get you out of thinking out of the ordinary. It gets you thinking about risks on the worst case side. It gets you thinking about opportunities on the best case side, right? And there's a customer in particular that I'm thinking about that we did this early in the year before COVID, and then so when COVID hit, like, hey, we were looking at a little bit of the worst case. We're looking at a little bit of the base case and a little bit of the worst case. But is there opportunity for us to do a tuck-in or do something on the best case side of it as well? And so they're already prepared, in their conversation, their thinking of adjusting what their expectations were and executing on some countermeasures to help them change course and navigate back to back to the North Star. But in particular, that is a professional service-based organization, the one I'm looking at, and they had already dialed in with your help, very much of like, if I hire here, this is when they're going to break even, this is when they're going to be profitable. So if I don't hire here, I'm not going to get any profit through the end of 2020.
Right. And then you're looking at it not just on an accrual basis, but a cash basis, because at the end of the day, with a lot of these plans, you want to understand cash flow break even. So
I think that gets us down to like the ActualstoBudget, which is kind of like the meat of the processes and tools to actually identify risk, because these other things are stuff that we do in your annual strategic business cycle, right? In order to get to a point where you can report on a monthly basis your actuals to budgets. And that is simply your actuals to your budgets, a report that we'll go through it here, but get that in a monthly cadence, right? And have your eye on any variances, right? And any variances you can dig into, like we'll discuss, into the execution plan, right? So that what do we need to adjust to get back to close that gap, and close the variance, and get back onto plan.
Yeah, and some of the reasons why like actuals to budget, it seems like, the way you made it sound was it's actuals to budget. It's like, yeah, it is a no-brainer, right? But the problem becomes when you have too many hands in the cookie jar and those chart of accounts are changing, your accounting policies and procedures are changing. Your plan is your plan, but what's happening on a day-to-day basis in your financial reporting, it actually makes this actuals to budget process a complete pain in the backside.
Oh, totally.
Right? And then you end up spending hours trying to recalibrate or rematch what was the original and that's why we've moved to tools like Giraffe. Total shout out to the Giraffe. We love it because it has not just simplified the process, but Giraffe has also allowed us to manage the quality issues, the rework. So looking at tools like Giraffe, I think are important. There are other tools out there, but we're big fans of Giraffe. And so other ways to identify risk beyond the numbers, it's pick up the damn phone and call your customers. Talk to your employees, right? Having those internal operators. So I'm going to dig into proactive customer communication because I believe in this one. Accounts receivables. We've been talking about working capital risk for the last few weeks. The gray area or the fogginess in accounts receivables right now is that you're not picking up the phone and talking to your customers. Every time you pick up the phone and talk to your customers, it doesn't have to be about when am I getting my check. It can be about what's happening. Being able to qualify, like what is their situation. So you can come back and be able to extrapolate that out into what is my cash. If I expected to achieve, 6 times a year type of AR turns, and I'm in the middle of this and I'm starting to see like my biggest accounts, even though they're great debtors, right? They're great, AAA quality, right? But they're delayed.
Yeah.
They're delayed by 6 months, not just 2 months. Picking up the phone and having proactive customer communications is imperative.
Because it's going to give you insight into that risk, not just when you're going to pay. That does not give you really any insight into your risk because you get another date from the person. But if you talk to the person, right, then there's going to be a person on the other end, right? Somehow find that person. That person says, "Oh, I'm actually going to be out in 3 months. I'm looking for my next gig," right? There's risk in that, right? Because the new person comes in, has no relationship with you, even though they're a great debtor, AAA, credit. They could just be like, well, screw that person. I'm not going to use them again. I'm just going to ask them to settle on 50 cents on the dollar. So having those conversations, I know that goes a little bit down a rat hole, but having those conversations gives you that insight where you can interpret what they're saying, what's being said between the lines, and put it into your own plan. Like, okay, that one's not at risk, or this one is. I give that one a 50% likelihood of not paying.
And so with that, the next step in identifying risks is internally. Right? So now that you have your actuals, you've got your budgets, you understand your variances, your gaps. Now it's about those internal ops calls, right? Those internal operations calls and saying, discussing things like quality, cash collections, working capital, revenue, HR hiring, and be able to readjust your plan. It's not readjust your plan, but it could be accelerate your execution plan. It could be delay your execution plan. It could, it's about the accelerator, the throttle, right?
Yeah,
it's the brakes.
Yeah, knowing what's happening within the organization. Think of those as your functional lead meetings.
So with all that said, we've talked about identifying the risks. What are the hows? How do you do it? Now let's talk a little bit about the managing of the risk. We talk a lot about countermeasures. What is that, Steve?
Yeah, so your countermeasures, it's really, you identify your risks or your opportunities. We'll stick with the risks because I think it's a lot more manageable, but to think about for most people. But you identify your risks, and then you look at countermeasures. Your countermeasure is going to be what the actions you're going to take to get back on course. Go back to navigation. Anybody out there that's sailing? If you're off course, you're going to come up with a plan to get back on course. Because if you don't get back on course, you're going to go off and be in no man's land and dead before you know it.
A big important piece here is keep it tight, keep it simple. Don't focus on too many things. Don't try to boil the ocean, right? What are the top 3 things I can do today that are going to have the greatest impact, magnitude, right? We want the things that are going to drive the greatest magnitude to get you back on course.
Yeah. So we always, or everybody always says you can't manage what you don't measure. So putting your budget together is your measurement tool, and then conducting the hard close of your books. That is you're closing your books. You're measuring yourself against your budget. And set up that consistent rigor, that consistent cadence, so that you are closing the books every month, no questions asked, that you have a process built in place that you're going to get your ActualstoBudget report produced, which is somebody's
you can't
job.
Get up to bed unless those books are closed on a monthly basis in a timely fashion.
And then you're sitting down with yourself or your management team to review those, right? And and to really digest what the numbers are saying, and go into the why, right? Why is that off? Have that conversation with the management team.
So other little sort of maneuvers or strategies, I'm not going to say it's not heavy lifting, but it's allocation of expenses. Where are the expenses being spent? What is it? Projects, programs? If you're a nonprofit, is it department? Which departments? If you're in hyper product development mode, venture backed, payroll allocations. That's important to me because that to me shows where are the investments being made and where are the expectations of return going to ultimately come from.
And just to kind of digging into that, like what are we talking about when we talk about allocating expenses, right? Because everybody's like, well, we put them into our chart of accounts. What we're talking about there is taking your payroll, right? It's not just one line for payroll across the organization, but you're going to have your R&D department, your data department, your admin department, your HR, your sales, right? You allocate this expense across all these different departments so that you can see. It does make it a lot more complicated. You need to do that in your budget as well as your actual books to be able to measure against that, right? So it's like things like payroll or travel expenses, right?
Right, and you could do that with your chart of accounts or using classes or some other tracking variable in these general ledgers. And then onto reviewing the execution roadmap. So you come out of these meetings, you have your budget to actuals, you've identified your variances, both dollar and percentage wise. Maybe adjust your view of certain things, and then what? What's your next call during your ops meeting? Yeah,
then you look at the why is this happening, and then you go back to your execution plan. What can I change so that I can get back on course and make sure I try to do our darndest, hit those targets that we set in place at the beginning of the year.
And so with the review of the roadmap, now we can begin to define countermeasures, right? Okay, so there's a gap, 20%, $200,000. It's all because of sales. What can we do on our, what can we do as a countermeasure today? Knowing our customer acquisition costs, can we pump more money into marketing? Do we have to have more inside sales help? What is it that we can do? Focus on 1, 2, or 3 things that can really drive that closure of that gap.
So, and even that, then to say, well, even if I can't drive more sales right now, what can I do in other places to go like another?
Now you got to pull back on other things. That's right. So here's a good example you came up with. You want to kind of walk us through this A to B report?
Yeah. So
by the way, a lot of guys talk about A to B reporting. I don't think they ever do it right. Most people do not know how to do A to B reporting because it's not just print the report and report it. you've got to go through this exercise, execution roadmap, define the countermeasures. If all you're doing, if you're just a CPA printing out an A to B report out of QBO and sending it to your customer, you're doing them a disjustice. You need to be able to be CFO, a COO, a CEO. You have to go through this process. Actuals to budget. What are my variances? What are my risks? What are my opportunities? What's my execution roadmap look like today? What's my countermeasure? You got to go through those 5 steps.
Yeah. So, we're going to take this in kind of three chunks. Review the actuals to budget, look at some of the causality of the actuals to budget, and then dive into the things that Dan was talking about, defining those countermeasures, like looking at what we need to do to close the budget gap, the variance. So this is from a example of a company that's got a SaaS business. They've got implementation revenue when you get new customers, right? And they got cost of goods, which is mostly people, and operating expenses. So a little bit of a blend of a technology company and a services company. We're looking at the AOP in column 2, the actuals in the first column. We're looking at subscription revenue, not too terribly far off, but at the same time, you see the implementation. In our budget, we had a lot more implementation revenue. So it indicates like we haven't hit as many new customers as we wanted to, or we haven't been able to actually get implementation fees upfront from the customers. So we're seeing that the subscription revenue is down, and it's going to have a longer term impact, most likely because the implementation services, implementation fees are down. But the implementation fees are a good example, like of actual budget. Like it's a big number. It's not huge. Obviously, their subscription revenue is their driver, but we are going to see impact from implementation in the overall
third-party transaction. That's tends to be.
Yeah, the third-party transactions under budget, but they changed a little bit of course, adjusted things, and brought some of that in-house. So those actually the internal transaction revenue, third-party transaction, for purposes of kind of comparing to our budget, we need to bring those together. So we actually see that we're a little bit over budget, which you're looking at something where the revenue on that is more than what we expected, which could be a good thing in the case of this. Most of those are a one-to-one trade-off.
So do you want to review the revenue section first, or you want to just kind of run through the whole P&L first?
Let's review the revenue section and then jump down to cost of goods. But they also had some custom development that obviously hasn't hit. So overall, their actual revenue versus their budget, it's about 22% off, about 200,000. In terms of where the core value of this business is in, I would say, in the subscription business. That one's not too far off, but again, that's a trailing or leading indicator of value to come. So looking at that as a kind of a big picture, obviously COVID has hit. That's had an impact on the ability to drive sales. Looking at what can we do to build out some countermeasures to drive more revenue, or look at this in a different context.
Yeah, so I mean, immediately sort of looking at this is I would be looking at what's in that implementation number on the fee side. Is there hiring embedded in that? Because to go from $160,000 plan for implementation down to 0, there has to be a story that's told there. But my gut tells me that the subscription revenue is not coming in, and either waiting once we get through this. So it's either you pump money into sales or you don't. And now you're looking at your back office and looking at your implementation team and figuring out how to cross-utilize resources or lay people off.
Yeah.
That's where my head goes to. I don't get very excited about the negative 34% drop in third-party transactions. It's a drop in the bucket in terms of dollars, but that's kind of where my head goes. So that 22%, over almost 2/3 of that is accounted for by just one line item. So.
Right. That's where it gets into the size, the materiality of each individual line item. Looking at the cost of goods, we are over budget in this category. Looking at people side, that's where most of this variances come from. The third-party transaction fees, they kind of almost a one-to-one offset with the revenue line item above, and the other category is smaller numbers. In regards to this, they've staffed up over their budget, but still haven't performed on the sales side to actually do that. And there's some they did bring on some internal transaction revenue. Some of that is people directly related to that payroll number, to try to get some more efficiencies on the service delivery side. But no, I think there's no major golden nuggets in there on the cost of goods, except that they are overstaffed for what they've got.
When your cost of goods sold increases by 7%, but when your cost of goods sold is over budget by 7% and revenue is down by 22%, that's a big differential. I would be concerned that you would have to be looking at the execution and countermeasures around people, because it's pretty much a people-centric business on the cost of goods sold. I would be concerned that if I couldn't see the revenue coming in the next 6 months,
you got to right size.
You got to right size.
And
so
then
that takes us to operating expenses.
Operating expenses, probably going to be more some of the more boring stuff that's going on in the organization, whether that's travel, office, professional services. In the case of this example, our G&A overall, we're trending not under budget, which lines up with where they should be with revenue, and the adjustments to revenue. Same with office and related. Where they're again over is on the people side, payroll and benefits. It gives a bit of a red flag. The professional services, they've had some issues related to COVID that they needed to address on the legal side. So a big piece of the variance there is related to some legal work that they've needed to conduct. And then sales and marketing, trending under budget, which just they're investing in their people and not in their sales and marketing.
So the biggest takeaway I see here is with marketing spend down or off by almost 20%. That is pretty close to where we're at with revenue. Right. So is there not enough dollars and resources being pumped into sales and marketing to support the ambitious sales goals that they have? They're obviously doing what they need to do to prepare for that on the operations side with people, but on executing on the sales and marketing, that gives me a little bit of pause. Mm-hmm. At least without knowing much about the customer, who they are, what their business model is, that's kind of my two big takeaways here. So I'd say with all that, this is the type of stuff that companies should be doing. Putting a plan together, reviewing the actuals to budget, being truthful with the team, with themselves around, why is it that we're not hitting, maintaining the accountability. It's too easy to blame it on this or that or COVID. But there's always going to be a black swan. There is always going to be risk. There's always going to be opportunity. It's how you handle it. I think that's the difference between a world-class organization and a company that's just making it by. Yes, things will come back, but you can't sit around waiting for things to come back. So that's my 2 cents.
Cool. So that is kind of look at your annual operating plan, your budget, where it sits in the annual strategic business cycle, and how to use it to identify and manage risk.
Yeah, and that's a really sort of high level view of how to look at an ActualstoBudget. I mean, I would actually layer on sort of a whole other layer of chart of accounts in there, because I would be looking again for that 80-20 rule, right? Towards 20% of those sub accounts in G&A or sales and marketing, that's really driving 80% of the expenses and value. So, cool.
I'm
All
good.
right. Thanks, Dan. And thanks for joining us again. Join us next week for GrowthLab Jump, and also tomorrow, the same time, 4 o'clock, we're hosting a panel event about adjusting to the new normal.
I believe TriNet, First Republic.
A great group of
Yeah.
professionals giving you
Across the U.S.
across the U.S. giving you practical advice. Like, that's where we focus our events. We know that your time is precious, and you're not just going to jump on another webinar to listen to a bunch of talking heads. We want this to be
Engaging.
educational, engaging for you, and to help you grow and manage your business.
Cool.
So
All right.
join us tomorrow, 4 o'clock.
Thanks.
Thanks.